I am talking about the market risk interview more towards the mortgage sector. So I am going to look here at a few things. I'm going to look at uh, risk analysis. I am going to look at so this would be my first talk. The second talk would focus on market risk, to be specific. The third talk would focus on mortgage. The fifth talk would be a little bit on the skills, soft skills, or rather I may call them IT skills. And yes, in the end I'm going to talk about some tough terms that you might need. So this is how I am placing the content of this video. So in risk analysis we have two types of risk. First is the market risk and second is the credit risk. As the name suggests, market risk is the risk due to dynamics of market, and those dynamics could be interest rate or anything that has to do with macroeconomic parameters, things like stress testing. Whereas credit risk is more towards default of people, whether they are going to default or not, or how credit worthy different organizations or different customers or different buckets of assets are. So those are the two types of risk. Now you need to understand the difference here. In the difference here is that on the market risk you have to understand about market. On the credit risk you have to understand about things like mapping people who are defaulting, finding out whether the people are going to default or not, or so on. So if you are looking at it from a mortgage side, a credit risk would be credit risk of your institutions who have bucketed those loans, or the people who have taken the loan. So those are the differences. Now these kind of job requires technical skills as well as finance, and that is the reason you might like to touch base on SQL and VBA. Again, we can look into that. So market risk is more towards market stress testing, asset liability management. What would happen if a market moves in a particular direction? Will you have your match going on and things like that? And then there is a specific modeling that is to model instruments related to mortgages. So if you have a mortgage bond, if you have an MBS security that you have invested and you want to understand how prepayment model would affect that, how are the interest rate dynamics going on in the market, and if you are a bank, then you need to look at the asset liability model. So even if you want to get this down, this is like a bank, or like and this is more towards something like investor. These are few skills. Now there are some software that would help you to understand asset liability management, because if you have loans that you have given to people, you have some cash flows coming to you, you might need to understand what's going on. So in that regard we have the two websites that we will look at.